Risk management, without a question, is the most important thing when it comes to trading. In this video, I'm going to show you guys exactly how I manage my risk, which allows me to have bigger winners, smaller losers, more confident trades, and more consistency in my trading. All right, guys, so we're going to go to a whiteboard right here, and I'm going to just draw out a demand zone like this and a supply level like this. So just say I find that a stock is finding some consolidation at the demand zone, and I want to take a long position. So I want to take a long position right here at the demand zone. Usually what I'm looking for is a take profit level at the next level of supply. So if I enter here at the demand zone, my take profit is going to be this next level all the way up here, because this next level is our next level of supply, our next level of resistance. So we'll say S for supply and then D right here for a demand zone. And now what is my stop loss? So my stop loss, pretty obvious, is going to be a break below this level. And the reason why I place my stop loss right here is because this tells me that this trade is no longer invalid. I will stay in a trade as long as my idea is valid. If I take a position right here because a stock is finding support at the level, then I will stay in this trade as long as that trade is valid. But once I start losing this level, that tells me that my idea that I came into this trade for is no longer valid, and I need to abort the mission, because this thing can continue going down hard and it can be looking for that next level of demand. So there could be a level of demand right here, and this thing can start pushing down looking for that next level of demand, and I don't want to be holding a trade that long and end up being down 20, 30, 40, 50%. But now I'm going to show you guys why you shouldn't just sell as soon as that trade becomes invalid. So just say the trade starts to break below this level a little bit. I don't sell immediately. I actually set a 15% stop loss when we break below that level. This allows the trade to have some flexibility, a little bit of room, because we could just be getting wicked out at a higher time frame, and I don't want to be stopped out of that kind of trade. Now, the number one thing that you need to be prioritizing with these trades is your entry. Many traders they have FOMO. They see a stock start to break above this level here. It pushes down a little bit and they enter that trade right here looking for that move higher, when in reality, the demand zone is over here. And they have FOMO, and sometimes it works out where the trade just starts moving higher and they make some profits. But then what happens when that trade starts to move a little bit lower? Well, they get spooked out. They end up hitting their stop loss. They end up going down 20, 30%. And then the trade comes right here and they end up getting stopped. And then this trade starts moving in their direction and they think the stock market is rigged. Well, the thing is, you are impatient and you are not able to wait for the stock to come to that demand zone. The best thing that you can do for yourself is to wait patiently for that stock to hit the demand zone. It'll allow you to have the best RR, the best risk to reward, number one. Number two, you're going to be more confident in that trade because you know you didn't enter too early. And then also it'll make your stop losses, your risk, a lot less. So when you enter the trade at this level, you know if it starts going against you, that you have a little bit of a wiggle room. And if you do end up hitting your stop loss, you know it's no more than 15% and you have capital to continue trading for the next day. So now I'm going to show you guys on some real life examples. So right here, if we look at Tesla, this 235 level for Tesla was a level of demand right here. I mean, this level for Tesla was a level of supply in the past. If we go to a higher time frame, I'll show you guys. So if we go to a higher time frame, we can see this level that I'm talking about. So it's this level right here. This is a level that was demand. Then Tesla broke below it. It became a strong level of supply. We broke above it. It became a strong level of demand, as you guys can see. And then we lost this level again, and it became a level of supply or resistance once again. Now, if we zoom in on a shorter time frame, I'm gonna go in and show you guys what we look for in this type of trade and how we are able to take those bigger winners and those smaller losers. So we can see Tesla comes to that 235 area and we see a break above that area. So the first thing that we usually look for, perfect, happened. We see that break. The next thing that we look for is the retest of that zone. So the next thing is we look for that retest of the zone. If I fast forward a little bit, we can see Tesla comes to that area and now we have the retest of that level, which is perfect. If you want, you can immediately take a position at this area, or if you want, you can wait for, better candle patterns, maybe some volume to come in. If you use Bookmaps, maybe you want to see those active buyers step in. But for me, a lot of times I just enter that trade with that confidence that this thing wants to move higher because those buyers, those active buyers just broke us above a very strong level. Now, it's about managing our risk. So we take a position around this area and our reward is the next level. So our reward is the next key level, but we always prioritize our entry and our risk. So we do not enter the trade up here. What traders will do is this thing breaks above, they enter right here, or they enter right here. And now when this thing starts to move down like this, they get spooked out of that trade because they didn't prioritize the entry. I am patient. I wait until we come to my demand zone. Now I enter the trade. And my risk for this trade is going to be something like this, where we start losing this level. So if I see Tesla start to lose this level, if it starts breaking below this level, I set a 15% stop loss immediately. 15% stop loss. If it hits that 15%, I'm out of the trade. I'm happy. I respected my stop loss. Perfect trade. Now we'll let this thing play so we can see Tesla moves on and it goes to the next level of supply, which is our take profit level. It is our take profit for our final contract. But as this thing is moving higher, I want to be taking some profits on these pullbacks. So I speak about that more in our day trading strategy video. So I'll link that video as well. But that is how I manage my risk. I prioritize my entry. I make sure I have a 15, maybe 20% stop loss at the level where the trade is no longer invalid. And I make sure I am confident and I stay in that trade a little bit longer. So my reward is always greater than the risk that I am taking with these trades. Alrighty guys, so that is all for this video. I'm gonna make another video showing you guys a little bit other tips when it comes to managing our risk. So that video should be out soon. So thank you guys for watching this one, and I'll catch you guys in the next one. Peace.